Hello everybody and welcome to another amazing video of DIY investing. I have a very important update to share with you guys, talking about a few charts that are going to be mapping out the long term of Bitcoin, going over each and every one of our cycles. A lot of people are feeling priced out because the market's already taken off so much, and I don't think that anybody is priced out at all. We are still way before our halving. That's still a few months away, and historically speaking, anytime you buy before the Bitcoin halving, it's been at an undervalued point, and we've seen the majority of the market cycle take off from there. I have very important charts to share with you guys that are going to explain exactly why we're still so early and why the majority of this money is still yet to come inside of the cycle as we're preparing for the institutional bull run. Thank you guys so much for tuning in, and with that being said, let's jump right into this amazing video today. Alrighty guys, the way that we're going to be breaking things down today is by looking at yearly increments inside of the market, because this is the best way to help you guys be able to visualize. I've had a lot of people worried that they're getting priced out, and in the short term, even though we're rocketing up quite a bit, and you are at least in the short term, I still think that we're at a point of, more undervalued than not long term. So when we're comparing the two, we're going to be looking at the peak all-time highs, and we're going to be drawing another line every time. So 365 days. Historically speaking, inside of Bitcoin, that has equaled our bear markets. They last 1 year from the cycle high to the cycle low. And this was the case not only in this last cycle, but this was also the case inside of the cycle in 2018, our 2018 bear market. Both of these were exactly the same, where we get this 1 year bear market, right? Now, this takes us into the following year, year two. 365 days, we just barely finished that year, right? So we're going to draw another point. Comparing to where we're at in the last cycle, that takes us to pretty much the first higher high of that new trend. And if we're looking at these two, we have year one is the bear market. Both of these were the same. Year two is the first stages of the uptrend, right? Where in 2019, we made this run up to 14K, and we kind of made this higher high. In this cycle, that was the run up to 31,000, where we actually retested 25K as new support. So it was the same. We made the first higher high to begin the new trend. The only difference was inside of year three, what we ended up seeing was a pandemic. And I don't think that that was going to be the case, if we didn't end up having a global pandemic. I don't think it would have had quite the same lower low correction. But what I find is interesting is both of them are still lining up to be the same. And the cool thing is we just got inside of this year three. So we're right smack dab in the middle of, in my opinion, the most important year, because this is also the year of the Bitcoin halving. So if we draw another line showing the Bitcoin halving, we're going to make this one yellow. That was our Bitcoin halving in the last cycle. It was right smack dab in the middle between this year. And if we're looking at where our projected Bitcoin halving is this cycle, we're looking at, April of next year. So we're just going to do April 14th. Both of these have lined up to be pretty much the same sort of cycles all the way in here. Both of them had the 1 year bear market. The second year was the first higher highs of the new trend. The third year, even though this one saw a lower low, it was still a higher high from, where we started the uptrend. So it didn't necessarily change. We just had that massive capitulation that took place. So after that capitulation, we run right back up to that same level we were at, get right back to resistance at the halving, and then right after the halving was pretty much where the majority of that bull cycle set in. And it was at the very ending of year three that Bitcoin was actually breaking those prior all-time highs, right? So what we'd be looking at in this current cycle today, when we're looking at where we're at, we just started this year three, right? And so we still haven't even had the halving, and we're still not even at the very end of that following year where we would be expecting to be moving around those prior all-time highs. That looking at this cycle of 2018, it's pretty much the same. That was right where we were breaking those prior all-time highs. So where we're at today, is pretty much here, if we were comparing the same sort of thing. So I honestly think that we might see a correction when we come back up to this 50K level. I've talked about it forever. And then from there, if we go through a lengthier period of consolidation, know that it's not going to be that far off before we're once again making another leg up to those all-time highs. Because historically speaking, we're still very undervalued. All of this is just going to be consolidation before we do finally get the move into new all-time highs. So I wouldn't say that you're getting priced out at all. We're still below those prior all-time highs pretty significantly. And it was at the very end of year three that Bitcoin finally broke those prior all-time highs. And so that was comparing the last cycle. If we go back to 2016, we might get a little bit of a different story, but in my opinion, it'll still end up lining the same. So now coming over here and looking at this cycle, we're going to be following the same sort of rule that we've been looking at. We're going to go 1 year from the cycle top, 365 days. This doesn't take us to the entire bear market, but it does finish the majority of it, right? How 1 year in the last 2 cycles, this cycle and the last one, was exactly the bear market. In 2016, we actually had the longest bear market of all, where we saw a lower low after that 1 year mark. Now, if we go another year from that point, it does follow the same sort of rule. It's just taking more time to kind of get to the same thesis. What we ended up seeing was the accumulation and then the first higher high. The only difference was the first higher high was pretty small in comparison with the last 2 cycles, but it was the same. We broke out of the double bottom formation, flipped that range high as support, and then started getting continuation right at the very ending of that year 2. So we've just finished year 1, year 2, and we're inside of this year 3. Inside of 2016 cycle, if we go another 365 days, that was to the point where we were getting close to the breakout of all-time highs, but even that ended up taking place a couple months after that 3rd year. But remember, once again, our Bitcoin halving takes place inside of that year 3 mark. So if we make that yellow, we saw the same sort of thing, where we start uptrending. In the middle of that 3rd year, we got our Bitcoin halving. Even though this one made a lower low, we still were maintaining this main uptrend and still maintain higher highs on the main uptrend until at the very ending of that year 3 mark. Bitcoin wasn't at those prior all-time highs, but we can see that that was pretty much the same moment where we did make that move. And it was actually that 2017 cycle inside of that year 4 where Bitcoin did all of this. And all of that happened just in 1 year. So Bitcoin took more time accumulating inside of the entire first 3 years of this uptrend. It was pretty, stagnant in comparison, I guess you could say. It was still very bullish. Like, nothing was stagnant about this. It just took more time to get to that move. But in the bull run, this was the biggest bull run, you could argue. And, it only happened in 1 small year. So it wasn't like it took very long to do all of that. All of the length was just in the beginning of the trend. So inside of our current cycle, we know that we're way below this halving. We still have a few months to go before we're even at the halving. And if we're still way below our halving, I don't know 100% how it's all going to line up. For me, what I'm kind of watching here is this main trend line, because what I think could play out is we run up to this 50K level like I've been explaining. We might see some type of correction in here where we come back down to retest this trend line again. And if we do see something like that, I don't know how it's going to line up around the halving. If we've been in a corrective phase going into the halving, I personally think that the halving will be bullish. If we're impulsing and we're sitting at kind of a high point in price, I guess you could say, going into the halving, I think it would be more of a sell the news type of event. So those are the things that I'm watching for. But guys, the big thing we're trying to understand, and I'm trying to help you guys visualize, is that we still have a long way to go in this cycle. If we're looking at what happened in this cycle, well, the last cycle, it was at the ending of year 3 when we were breaking out of those prior all-time highs. If we're looking at 2016, we were still below those prior all-time highs, but we were pretty much at that same moment of time. So far, this cycle has taken off pretty good. We're seeing very consistent, uptrending, very consistent growth, higher highs and higher lows on this main uptrend. So it's going to be interesting to see how we hold up and how the halving actually influences going into this next cycle, because this will be the cycle that we're going to see institutional adoption. So if we end up seeing a little bit more, involvement leading into this halving, don't be surprised. But the big thing I'm going to be watching for is some type of correction to take place once we get around this resistance over here at 50K. From there, that's where we could be making another move back down to this trend line, and we would be looking at a little bit more of a consistency reminding me of that 2016 uptrend, where all we're really doing is just maintaining higher highs and higher lows on the beginning of this new trend. And we can see that it was at the very ending of that year 3, beginning of year 4, that we got that move into new all-time highs. So I would be more or less expecting similar results. The only reason we would expect it could be different would just be because of the 2018 and 2019 cycle, where we ended up seeing this COVID capitulation break that main trend line. But regardless, we've always seen the same sort of things, where we begin this early uptrend, higher highs and higher lows, and at the very ending of year 3, beginning of year 4 is when we make the move into those new all-time highs. We still have a whole another year to go before we're even at the end of year 3. And then we still have a whole nother year to go after that before we're making the move into new all-time highs. So like I've talked a lot about, guys, we're still looking at the end of the year 2025 as us for really taking our heavy profits, right? And that's kind of still the same thesis we're going to continue to stick to. We have a long ways to go in this cycle, right? And if we're zooming out, we'll move it to a little bit of a bigger time frame. If we zoom out here, our cycle top's looking somewhere all the way over in here at the end of 2025. So we still have quite a while to go. We have this entire year to still fill, and then we still have a whole nother year to fill before this cycle's over. So hopefully that helps you guys have a little bit more, belief inside of what we're doing. Hopefully it helps calm some of those emotions, not wanting to FOMO as much, just being able to see how the big picture trend is developing. All we've really done is make the first higher high, and we're getting continuation from that point. So any correction would be just the opportunity to get in, and especially coming into this halving, anytime you're buying pre-halving, it's been a great opportunity. It's always been an undervalued point. And I think that as long as we're below the prior all-time highs going into that halving, I don't think it's going to be, a bad time to buy at all. Really, any time below the prior all-time highs has been a good level to buy. Even inside of the last cycle, which was, a little bit lackluster in comparison, we can still see that this thing had a significant move past those all-time highs, right? The majority of that cycle took off into new all-time highs. So depending on how crazy the cycle gets, you just want to be prepared before that happens, because that's all that really matters. As long as you got positions, skin in the game before those all-time highs, new all-time highs is where we're just looking to hold and maximize the fullest potential of what the cycle is going to bring. And if this is the institutional cycle, like I believe it will be, don't underestimate the potential of these things front running a lot of people and pricing people out. So anyways, this is the video I had for you. If you did find value, leave a like, comment, and subscribe. Hit the notification bell so you don't miss out on any of these updates. If you guys want to join the Discord server, see how I'm actually investing over this cycle, links are in the description to go ahead and sign up on my website. You can get access to all of my signals, anything that I'm buying, selling, trading, NFTs, whatever it is that I'm doing with my money. Links are in the description. Check it out on my website. Thank you all so much. And with that being said, I'll catch you in the next one. As always, peace out.